Hello and welcome. Here's a quick list of great undervalued dividend stocks you can still pick up while they are cheap and near their 52-week low. To show respect and appreciation of your time, let's get right to it. Disclaimer: this are all my opinions and not to be considered financial advice. Number 4. JP Morgan Chase & Company, ticker symbol JPM. Current price of $111.89. JPM is down by 27% on the one-year charts. JPM is very close to the all-time 52-week low of $109.31. Market cap of $334.97 billion. Current dividend yield of 3.55%. PE ratio of 9.94. Payout ratio of 29.35%. 5 years dividend growth rate of 15.33%. So why should you load up on JP Morgan? This is simply the biggest bank in the United States with total asset of around $3.19 trillion. Strong business across consumer and community banking, corporate and investment banking, commercial banking, asset and wealth management. Number 1 in everything. Number 1 in U.S. credit card sales. Number 1 in U.S. retail deposit share. They serve more than 63 million households. Their website is visited more than any other banks in the USA. More than $1.1 trillion in credit and debit card sales volume. Balance sheet strength and strong fundamentals. 5-year stock growth of 19.22%. 10-year stock growth of 210.2%. With the Fed set to continue increasing interest rate to fight this stubborn inflation, JPM is only going to grow stronger. According to 19 analysts, JP Morgan has 11 buys, 6 holds and 2 sells. Target high price of $200 and target average of $151.94. Which means JP Morgan may be 35% undervalue. Number 3. Illinois Tool Works Incorporated, ticker symbol ITW. At the time of this video, Illinois Tool has a current price of $182.23. Illinois Tool is down by 18% on the one-year charts. Illinois Tool is very close to its all-time 52-week low of $177.10. Market cap of $56.96 billion. Current dividend yield of 2.67%. For investors, that's $1.22 per share a quarter or $4.88 per share a year. Illinois Tool has grown their dividend for 12 years. Illinois Tool has a payout ratio of 59.26%. So why else should you consider loading up on Illinois Tool? They have a nice consistent dividend growth. Illinois Tool yields 2.67%, which is one of the highest among its peers. Illinois Tool has a 5-year dividend growth rate of 13.42%. ITW is a great dividend stock with attractive valuation. They have balance sheet strength and strong fundamentals. 5-year stock growth of 24.76%. 10-year stock growth of 259.07%. Illinois Tool currently trades at a forward PE of 20.02. According to 8 analysts, Illinois Tool has 2 buys, 4 holds, and target high price of $261 and target average of $213. Which means Illinois Tool may be 16% undervalue. Number 2. Texas Instrument Incorporated. Ticker symbol TXN. At the time of this video, Texas Instrument has a current price of $150.81. Texas Instrument is down by 21.21% on the one-year charts. Texas Instrument is very close to its all-time 52-week low of $144.50. Market cap of $136.97 billion. Current dividend yield of 3.09%. For investors, that's $1.15 per share a quarter or $4.60 per share a year. Texas Instrument has grown their dividend for 16 years. Texas Instrument has a payout ratio of 48.33%, which means that there's good room to raise the dividend. So why else should you consider loading up on Texas Instrument? Texas Instrument has one of the greatest economic moats with their line of products and offerings. They have a nice consistent dividend growth. Texas Instrument yields 3.09%, which is one of the highest among its peers. Texas Instrument has a 5-year dividend growth rate of 18.91%. They have balance sheet strength and strong fundamentals. 5-year stock growth of 92.16%. 10-year stock growth of 458.14%. Texas Instrument currently trades at a forward P/E of 16.32. According to 20 analysts, Texas Instrument has 8 buys, 10 holds and 2 sells and target high price of $230 and target average of $184.47. Which means Texas Instrument may be 22% undervalue. Texas Instrument's 5-year total return, which include price return and dividends, beats the S&P 500 hands down. We noticed you still haven't liked, subscribed or turned on the notification bell. Please kindly encourage us if you've gotten some value from this presentation. Your like and subscribe will help us know that you like content like this. Please join our community and be a part of our growth here on Wealth Listicles. Thank you. Now let's move on. Number 1. Honeywell International Incorporated, ticker symbol HON. At the time of this video, Honeywell International has a current price of $173.21. Honeywell International is down by 21% on the 1-year charts. Honeywell International is very close to its all-time 52-week low of $168.96. Market cap of $119.20 billion. Current dividend yield of 2.28%. For investors, that's 98 cents per share a quarter or $3.96 per share a year. Honeywell International has grown their dividend for 18 years. Honeywell International has a payout ratio of 47.51%, which means that there's good room to raise the dividend. So why else should you consider loading up on Honeywell International? Honeywell International has one of the greatest economic moats with their line of products and offerings. They have a nice consistent dividend growth. Honeywell International yields 2.28%, which is one of the highest among its peers. Honeywell International has a 5-year dividend growth rate of 7.03%. They have balance sheet strength and strong fundamentals. 5-year stock growth of 21.26%. 10-year stock growth of 199.67%. Honeywell International currently trades at a forward P/E of 19.73. According to 10 analysts, Honeywell International has 5 buys, 5 holds, and target high price of $235 and target average of $215.60. Which means Honeywell International may be 24% undervalue. So to recap, we mentioned Honeywell International as number 1 on this list. Texas Instruments in number 2. Illinois Tool Works in number 3. And in number 4 we have JP Morgan Chase. So which one of these do you already own or are you planning to open a position on? Please comment below and let us learn from you. Remember, all we do is bring you the lists for entertainment. It is your duty to do your own due diligence and/or consult an expert and invest your hard-earned money wisely. Please don't leave us without smashing the like button and give us a subscribe. Think of it as a tip for my hard work. I will greatly appreciate it. Thanks for watching, and I'll see you in the next one. Disclaimer: please note that I showcased these stocks for educational purposes only and shouldn't be taken as investment advice. I don't personally own all these stocks, just some. Please do your own due diligence and/or consult your expert investment advisor, as more fundamental analysis may be needed before investing. Please also note that the past performance of these stocks does not guarantee or indicate similar future performance.